Alright guys, welcome back to Roxum TV and also welcome back to Jam Crypto. Whichever platform you're watching on, I hope you guys are having a fantastic day. As for Bitcoin, well, the price action, I'm not going to lie to you, is kind of boring because we know from a TA perspective, Bitcoin is kind of kicking the can down the road. We thought we're going to get the confirmation last week as well, whether we're heading to a bear market or we still remain in a bull market. Because last week, very interestingly, just before we head to the Monday, so the weekly candle close, we know that Bitcoin closed above the 50-week moving average, which is one of the indicators to determine whether we are in a bull market or a bear market already. So it's very interesting to see TA and on-chain, they kind of arguing, they're signaling different stuff because TA wise, not gonna lie to you, I have been looking at the chart every single day. I have been doing analysis on Roxum TV from Monday to Friday, and TA wise, I'm not seeing a lot of bullish signals, but on-chain wise, none of the on-chain indicators are flashing that we are already at the cycle top. So of course, we're gonna look at the numbers, we're gonna dive deeper. And there are breaking news in terms of like crypto news, because we know we have the first US national bank to offer crypto trading. So that is a massive thing. And I'm really surprised how Bitcoin is not picking up on that, because what it means is that moving forward, there will be more traditional banks offer their users to have the option to purchase Bitcoin directly from the saving accounts. And that is like billions of dollars coming into the Bitcoin market. And I wonder why Bitcoin is not pumping enough. Is this another early sign of a bear market? Because one thing about the bear market, we know no matter how good the news is, it's just like it's not enough liquidity to somehow move Bitcoins to the upside. It's not enough bullish momentum. So it could be one of the sign. We don't know yet. Another thing that happened yesterday, since our yesterday's live stream, is that AI is kind of crashing a little bit. We know, we know this channel, we love looking into AI because I believe AI is the future. But what happened yesterday was that AI is crashing so much. And it's actually because of one company that caused this AI market to crash. And some people like to say it's the AI bubble popping. I don't like to use that word or bubble. The B word is a very sensitive word, but yesterday it wasn't a nice day in the AI sector, in the traditional market neither. And also when it comes to AI, of course, we have to look into the battlefield between China and also between the US, because yesterday Democrats, they bring up a really interesting topic, is that, well, AI data center has been consuming so much energy, and even average American household, they are paying so much more money just because the AI data center is consuming all the energy and drive up the energy cost. So we're gonna look into that. Looks like China, they have all the cards in this day and age. Let's just put it that way. Of course, I'm gonna offer my perspectives, my own take onto the whole battlefield between AI. But without further ado, let's actually dive into the Bitcoin chart. Let's actually look at the Bitcoin TA for now. We're not going to spend too much time on the chart today because yesterday I do a deep dive. I do longer than like a half an hour segment just to look at the chart. So as we know, not much has changed compared to our last show yesterday. So we are again from the daily chart, we're slowly building from the shorter time frame to the higher time frame. So let's start with the daily chart. We know overall we're still on a downtrend, and we have been building up this downtrend ever since the new all-time high of $126,000. And of course, we saw that on 6th of October, which is a line if you guys are a 4-year cycle believer. So ever since that, we are on a downtrend, and it looks like Bitcoin still hasn't broken out of this downtrend. Like we're still finding a lot of resistance at these critical areas. So even if Bitcoin pumped to like 108K, I wouldn't say we're out of the wood yet. Like, I need to see a daily candle actually close above that and maybe retest that as a level of support for me to flip bullish. But at the moment, after more than a month, actually, I'm still not seeing that from the daily chart of Bitcoin. So very much it could still be a dead cat bounce, and then maybe we'll head lower, and then eventually we're gonna see a 2026 bear market. But in terms of the daily, there isn't much confirmation because again, we're just like kicking the can down the road so that maybe next week, maybe okay, actually maybe this week or next week we'll have confirmation whether we are already at the bear market cycle or not. But one thing, another indicator for sure is that I'm eyeing 98 and 97K this level. I'm viewing this region very critically because like if we lose this support, so 97K, we are heading for lower places. So another the bear market is very much still on the table. So two signs: I need to see Bitcoin get above this downward momentum. Otherwise, very much it looks like a dead cat bounce. So here on the daily, let's also hop onto the weekly very quickly because I don't want to spend too much time on the chart today. So, as for the weekly, again, I need to see Bitcoin break out of this downtrend. And in terms of the weekly, there's one thing I noticed. Basically, we have been building this like bearish divergence ever since March 2024. And you see the RSI is heading lower since March 2024. So this could be another early sign that we are maybe at the early stage of bear market and possibly that transition period between the bull and the bear. One thing, okay, it's not like all doom and gloom because again, one thing very nice that I like to it kind of brings some optimism to the market is that at the end of the day, we have the weekly candle close above the 50-week. So of course, the 50-week is the blue line here. Let me remove the region so it's easier to see. So of course, the 50-week is the blue line here, and we technically table. So this is the weekly. Let's also very quickly hop onto 2 weeks chart. So we're slowly building that to the higher time frame. So on the 2 week chart, one thing I noticed, and it's a little bit scary on the 2 week chart. So some, again, more bearish sign. One thing I noticed is that for the 2 week RSI, we have been building up the support. So there's like a uptrend momentum. But one thing I noticed is that, okay, since 2 weeks ago, or a little over 2 weeks ago, we've broken out of this upward support, which is like usually when that happens, that means a bear market is on the way. So this is what the 2 week is signaling. Again, the TA is kind of contradicting with on-chain. We're going to look into the on-chain right now, actually. So the first indicator I want to bring it to you guys is, of course, the Bitcoin Everything indicator. It's like the master dashboard that mixes many key Bitcoin metrics into one simple chart. So this is the chart we are eyeing today. It blends data about investor profits, network activity, and global money liquidity to show where Bitcoin might be in this cycle, whether it's overheated or neutral or undervalued. It includes basically all the popular indicators out there. So MV set score, which we have talked about that extensively on Roxham TV. So MV set score, we have the SOPR, global empty liquidity, of course, AASI. We're also going to dive into the AASI indicator. So when the indicators, there's like everything indicator, when it moves high, it signals market is at a euphoric stage. So how do you read this? So focus on the orange line here, and then the black line is of course the Bitcoin price. So if we had really high, because like here 2017 it was a bull market top, so as 2021 it was the cycle top. as well. So if this indicator is at the higher area, so here is highlighted in red zone. So if we hit this area, that means it's like extremely euphoric and people are getting really greedy. That's usually a sign that we're near a top. So vice versa, when drops low, it shows fear and undervaluation. Long-term investors are quietly accumulating. So what it means right now, so let us zoom closer. This is what's happening at this instant. So the everything indicator has just bounced off the low end of its range. So we drew two lines here, and it kind of like looks like a triangle, symmetric triangle. So the same area that is acting as support all cycle long right now is forming higher lows as well, meaning the market's underlying strength is still building even as the price cools off. The last touch at the bottom was on 4th of November. We circled that in blue. So this like blue circle here is blue region. And since then, the metric has been climbing up again. Each dip has helped reset investor emotions without falling into the panic levels seen in past bear markets. Even though it's rising, the indicator remains far from the overheated top zone because it's like actually nowhere close. We know there's a diminishing return, but it's like nowhere close. That means we're likely in a mid-cycle consolidation phase, not a final blow off top. Because for Bitcoin, having a 21% correction in a bull run, in a bull market, is extremely normal. In simple terms, the data shows Bitcoin is still very much in a healthy zone. The market has room to grow, and the big peak has not happened yet. So, this is the first indicator we're looking at. The second one is the AASI, is of course the active address sentiment indicator. We kind of talk about that in the everything indicator. So this indicator specifically, we look at how fast Bitcoin's price is moving compared to how active the network is. It checks the 28-day change in price and compares it to the 28-day change in active Bitcoin addresses. Basically, how many people are sending or receiving BTC, like how active these Bitcoin addresses are. If the orange line, so that's the orange line we have here, that's the 28-day price change. If the orange line jumps above the red zone, so we have the red zone here. If it went above, for example, here and here, if it went above, it means price is rising faster than the network activity. That often shows too much short-term hype, which can lead to small local drops. On the other hand, when the line falls near or below the green zone, so here we have the red line, here we have the green line. So if the orange line goes below the green line, it means sentiment has turned too bearish. People are too fearful, even though network activity stays steady, which usually sets up a short-term bounce or relief rally. So what this means right now, right at this instance, the AASI has dropped down to the green zone. So below that green line, the same area where local bottoms have formed before, this suggests that the market might be ready for at least a short-term rebound. Traders often watch this signal for quick entries and exits because it reacts fast to shifts in sentiment. However, this is not a long-term trend indicator. Like, it doesn't tell us if the full bull or bear cycle has changed. It's more about spotting short-term emotion extremes when the market is too greedy or too fearful, giving a general clue that a short-term bounce or a cool down could follow soon. So this is what on-chain is suggesting us. Let's also hop on to the that indicator, like that on-chain indicator, this is again, a really popular one is of course the net unrealized profit and loss by the set score, or in short, is the NUPL set score. So what does this do? It helps us understand how much profit or loss Bitcoin holders currently have, even if they haven't sold yet. It looks at the difference between unrealized profits and unrealized losses across the whole network. So unrealized profits means like holder bought Bitcoin cheaper than it is now. Unrealized losses, of course, like vice versa, like holders bought higher than today's price. And the set score, pay attention, there's like a set score aspect added to this metric. So it adjusts this data based on Bitcoin's history, helping us clearly see where things are overheated or deeply undervalued. In other words, if it's deeply undervalued, it's time to scoop up some of that BTC. So this chart also split into the, we have the short-term NUPL set score, which is the pink area here, like short-term, meaning buyers, they bought their Bitcoin in less than 155 days. Short-term short-term traders are usually more emotional or more reactive, whereas long-term, so we have the blue region here, the not long-term NUPL set score. The blue line is the calmer because they're long-term holders, so they're less likely to sell. We also have the yellow region, which is the combined big picture signal. And basically, we put everything into different colors. So we have the blue area, usually it means capitulation. And then we have the orange zone, which means, okay, is getting a little bit excited. Profits are growing massively. And then, of course, we have the red zone. Like if we have to zoom really close, usually the red zone, we don't stay too long because like people get too hyped. And at the moment, let's look at what's happening at the very instance. At the moment, NUPL set score shows no major unrealized profit, meaning we are far from the overheated levels seen near cycle tops. In fact, the data looks similar to the last two local bottoms of the cycle, so it suggests that we may be forming another bottom here. Historically, a bull market never ended before showing much higher profit levels, so it's too early to call a final top. In previous bull runs, this metric flashed euphorism and excitement, like euphoria before a real peak. This cycle has only reached mid-euphorism so far, like Bitcoin's mid-run in 2017. That means the true big move up might very much still be ahead of us. So there are still bullish tailwinds. Like we know QE very likely to start, like at least we have confirmation that QT is going to come to an end on 1st of December. So that supports the long-term demand. Bitcoin's fundamentals remain strong, of course. The data points to a bottom still forming, not a top. Short-term drops might continue because, well, in terms of short-term drop, it's actually aligned with the TA I'm seeing here because like daily, we're still trading below the general trend line. So in short, like let's just be patient. The market may need some time to reset before the next strong rally begins. So again, that is a lot of data. That's all the on-chain and TA I want to focus today. I'm not going to spend too much time on TA. Like if you want my deeper analysis on where BTC is going, I recommend you checking yesterday's live stream. But today we have actually a lot of news to go over. So let's take a little break, and after that little segment, ad segment that we have, we're going to come back and we're going to dive into the news analysis. See you guys in a bit.
Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
All right, guys, welcome back. As I promised you before we hit on that little break, after all this data and after all this number, let's also dive into the news because we have breaking news today. Actually, really positive news. So I'm surprised that Bitcoin didn't move a needle. So, first thing first is that we have the US bank offering crypto trading. This is actually the first US national bank to do that. So the bank is called SoFi. SoFi Technologies officially launched SoFi Crypto, making history as the first and only national chartered FDIC insured bank in the US.
Yeah, sure.
to
Of
offer
course.
direct
I've been
crypto
through
trading
communism,
to
all of that stuff, so
everyday
I don't know what you're
users.
talking about.
Where are you from?
This news
Hungary.
for SoFi,
So back in the days,
they
it was
have 12
like it was
million
actually
users.
communist.
They can now buy
And,
and
it
sell and
sucked.
hold Bitcoin,
So anybody,
Ethereum,
I don't
Solana,
know.
and 20 more other tokens directly inside the SoFi app. No exchange needed, like no exchange account needed whatsoever. Like this is great news. And this launch comes after the US gave the green light for banks like SoFi to engage in blockchain-based financial services earlier this year. It's a huge step forward for mainstream crypto adoption in America and a clear sign that regulators under Trump administration are becoming more open to digital assets. So let me know if you guys use the SoFi. There's some comment about my audio. Let me know if my audio is all right. But yeah, just like react to me and let me know everything in the live chat because I'm watching the live chat constantly. So let me know if you guys use SoFi. If you don't, like, here's the background of SoFi. Here's some information. So SoFi stands for social finance. It actually started back in 2011. So at the Stanford University at a student loan refinancing platform. Over time, it evolved into a full digital bank offering loans, savings, investing, insurance, and credit cards, all through one mobile app. After acquiring a small California bank in 2022, SoFi earned its national bank charter, like becoming SoFi Bank in the US. So SoFi is actually, okay, they are not the biggest. It's definitely not one of the big four. Of course, the big four stands for JP Morgan, Bank of America, Citigroup, Wells Fargo. But it's the one of the fastest growing neobank, valued around $8 to $10 billion. So they're not like small. Unlike traditional banks with physical branches, SoFi operates entirely online and appeals to, of course, like younger demographics like you and me. So, more tech savvy people is often compared to Refold, like the UK one, combining fintech convenience with regulated banking protection. So, how this work, like how this breaking news and how do you buy basically cryptocurrencies within the app. So inside the SoFi app, users can directly fund crypto purchases using the FDIC insured checking or saving accounts, buying or selling Bitcoin is as simple as trading a stock inside your bank account. Because I'm not sure if you guys do that. Banks actually offer that option. Like if you want to purchase stocks from your saving accounts, banks actually offer that, but of course the fee is going to higher than if you use a typical exchange. So they're now doing that for crypto. They support 20 something digital assets, Bitcoin, Ethereum, of course, and Solana. Like Solana is one of my favorite assets of all time, and it's very good to know that within SoFi app, users can directly buy Solana with fiat dollars. So the fees is around 1 to 1.25% spread. It's very competitive with beginner platforms, and SoFi actually holds the custody, like holds the crypto for users in its in-app wallet. So no external transfers yet. Right now, they have this promotion going on. So like, if you deposit, like make 3 trades before January 2026, you now have a chance to win 1 Bitcoin. Of course, it's like a promotion kind of thing. So let me know if you guys are interested in doing that. SoFi also reviewed plans for stablecoin. So they're going to have a SoFi USD and crypto-backed loans in 2026, plus Lightning Network powered remittance for cross-border payments. So this is actually a big deal. I wonder why, I feel like media is not talking enough about that, and I'm contributing to that now. So this is a big deal for non-US viewers. This is like, think of it, HSBC or Barclays. They are really traditional bank and suddenly letting you buy Bitcoin inside their app. Of course, SoFi is not as big as Barclays or HSBC, but it's getting there. This is the first step. In the US, banks were banned from direct crypto exposure for years. So SoFi actually wanted to do this 2 years ago, but because it was under a different administration, but now they're given the opportunity to do such thing. They could only offer ETFs or custodian services like back then. Okay, SoFi's move actually marks a policy shift that could reshape the American banking landscape. It builds trust for retail investors who have avoided exchanges ever since FTX collapsed, because that was really wounded. I was there like back in 2022, and I hate to break it to you guys, like I still feel the trauma sometimes. So that's why I'm being a little bit more a responsible trader compared to 2021, my past self. But anyways, let's come back to this news. Analysts call it a turning point for adoption, not just for SoFi's 12 million customers, but for the entire US banking sector. So what's happening next is that I do expect other institutions, like other banks, are going to jump into the wagon, joining the wagon. Maybe institutions like Charles Schwab, Chase, or PNC, because they are reportedly preparing similar rollouts. Analysts expect that by 2026, as many as 1/3 of US banks could offer some form of crypto trading or lending. So for Bitcoin and for crypto markets, this means higher adoption, billions in new inflows from retail traders, from retail users, and there's like a legitimacy boost as well. There's a stronger trust and compliance because we know some of the demographics, especially if they are very conservative, they don't feel the trust in all these like crypto exchange, because like we know over the past few years how media like to portray crypto like, okay, crypto is full of scam. I don't have any argument there, but there's also a lot of great things. And for the general public, seeing media brainwashing them like, okay, crypto is just like very volatile, very scary, very risky. So they don't feel safe to hop onto a crypto exchange, like even Coinbase. Like they feel the barrier of doing such thing. But like if the local banks that they're already using and offering such thing, all of a sudden is adding a lot of that legitimacy, is adding a lot of confidence to the market. And this is just the start. This is not the SoFi. So SoFi is not a traditional bank, but I do expect more traditional bank going to join, and one way or the other, they have to offer crypto to the customers. Otherwise, they will risk that customer going to other banks. So competition is keen. One way or the other, they have to enter this bandwagon. All right, so this is great stuff. This is what I saw basically today. And let's also hop on to the what happened yesterday, because you know me, because like I love AI, and I am a heavy investor in the AI sector as well. So what I saw yesterday is that okay, SoftBank, this is okay, they have the latest earnings, so Q2 earning, and absolutely shocked the market with a massive 2.5 trillion yen, so Japanese yen, which is equivalent to 16 billion USD. 16 billion USD net profit in Q2, which is more than double its previous quarter. This surge was mainly powered by its like 2.1 trillion yen, which is like 14 billion USD valuation gained from OpenAI alone. This sounds really good, right? Like they have a really nice Q2. The earning is so much better than expected. But if you actually dive deeper into the news, SoftBank is the reason why we saw the AI market crash yesterday when I was trading that last night in Hong Kong time. All right, so what happened is that SoftBank, okay, by the way, if you didn't see the AI portfolio last night, Hong Kong time, for you guys, maybe basically half a day ago, let's just put it that way. So this is the AI portfolio, and it's all red. This is just what happened yesterday, and people really did not enjoy that slightly much. Well, so SoftBank, what happened is that they sold the entire bag for their Nvidia stake. So 32 million shares worth $5.8 billion. And it just happened like to sold the entire bags. So combined with its $9.2 billion T-Mobile divest investment, and the company generated over $15 billion in liquidity, marking one of its biggest cash repositions ever. Yet the market reaction was really mixed. Like SoftBank's, the stock fell like 10% in Tokyo the next day, and of course Nvidia was dropping quite a lot as well, because like Nvidia got I would say dumb. Okay, let's just put it that way. It's dumb. Got dumped by SoftBank, so that's why we have some volatility even in a giant. And Nvidia is the first company that reached that 5 trillion market cap. So yeah, this is what happened yesterday. So if you guys don't know about the SoftBank, here's some background about this company. So SoftBank founded in 1981 by this Japanese guy. So his name is Masayoshi Son. So he began as a small PC software distributor and slowly evolved into a global tech investment powerhouse. Today, it operates across three main pillars. So the first one is vision funds, so those high risk, high reward tech stuff. They invested in Uber, WeWork, OpenAI, etc. The second pillar is telecom. So SoftBank Corp, they are serving 50 million Japanese people and generating steady cash flow. So the business is actually very huge for for SoftBank. And then that one is some tech ventures, maybe human robotics or maybe AI chips or IoT starts up. They actually invested in Boston Dynamics as well. So if you guys are into human or robot, be sure to check out the video on Gemgem Crypto where I compare all the options and all the companies between US and China. So for this company, in 2025, its stock nearly tripled, driven by AI hype, and its 4-to-1 stock split aimed at attracting retail investors. But let's come back to the story, like they're selling the entire bag of its Nvidia share. So the relationship between SoftBank and Nvidia is actually quite interesting because it goes way back in 2017. They did buy and sell Nvidia back in the days, like back in 2017, but then they slowly built up their position again since 2020. And all of a sudden, out of nowhere, they are selling. So the question I want to ask is, why do they sell now? All right. So first reason, the public reason is that SoftBank owns $22 billion to finalize its OpenAI stake. So it's about 11% ownership. That's actually quite a lot. The sale funds that commitment. So they are basically regenerating that Nvidia cash flow, that Nvidia profit, and into new investment into OpenAI. So that's reason number one. Reason number two is more like a strategic shift. So moving from hardware, because Nvidia focused on AI chips making, to more AI application, because OpenAI focused on software, focused on basically it's not like building an actual product, right? Not like a physical product you could touch, but more like an AI application. For example, OpenAI, for example, like some AGI projects. And then the reason number three is being liquidity management. So it by selling Nvidia stocks, it reduces debt and secures cash for expansion without taking new loans. So as for how the CFO of the company, so CFO of SoftBank, how he summarized it, he's saying they're just cycling profits from infrastructure into the future, which is AI application layer, aka OpenAI. But as there are, of course, there are two sides of looking at things, there are two sides of the story. Some people think this is actually a signal of an AI bubble about to burst. All right, so signal or not, I could see where they're coming from. Because if you look at the valuation of OpenAI, it's crazy because OpenAI is valued at $500 billion. But I'm not sure if a lot of you guys know this. OpenAI is actually operating at a loss, yet they value $500 billion. And then another reason why people think this might be an AI bubble about to pop, because think about that. There's a circular risk. SoftBank funds OpenAI, and OpenAI buys Nvidia chips, and Nvidia valuation rises, and SoftBank sells Nvidia. So there's like a constant loop going on in the whole AI scene. So it's not just between these companies. Yeah, I mean, looks like the risk is, I would say, yes, is valid, and people are drawing ties with the dot-com bubbles. Of course, we saw that in the 1990s. So as high multiples, speculative capital, and infrastructure overspend kind of mirror what happened in the 90s. So most analysts see this as a cooling rotation rather than a collapse. But again, bubble or not, I don't know. Because like when it comes to even a dot-com bubble, what happened in the 1990s, the tech was real. So internet is a real thing. Like we are using internet today. Like I'm using internet right now because that's why you guys can see me doing live stream, doing my show. So internet is very much a real tech. But what happened back in the 90s was that it creates a frenzy. It's getting so frothy. And all these companies, they basically just throw out the idea of internet, without actual implementation. And what we have seen in the past is that projects could just slam the name of internet and they're going to raise a lot of money. They're going to do really well. So that's the frenzy we're in, even though the tech was very real. So internet is a real thing. Same for AI. So that's why people were drawing tight. And as for the CEO, I would say the key takeaway for investors. So the CEO himself, Masayoshi Son, isn't exiting AI. He's just like moving up the value chain from chip supply to intelligence itself. Whether it's visionary or risky will depend on how fast OpenAI turn its $14 billion annual losses into real profits. So the question is whether the CEO Masayoshi Son just timed the top or he's building the next $1 trillion frontier. Again, time will tell. But what we know is that speaking of AI, of course, we have to jump to some energy crisis because there is some energy problem. Well, it's not like a crisis, but like there's some issue because like in the US, the energy cost is going up. And we know AI is consuming so much energy. Like running AI data centers use huge amount of power, actually enough to power millions of homes. Right now, the US is struggling with high energy costs and old power systems, while China is actually quietly building a strong advantage with cheap, clean, and stable energy, stable electricity. So let's break down what's happening and why I'm all of a sudden comparing the energy aspect between China and US, because this just came out yesterday. Well, yeah, yesterday. So came out on, well, no, 2 days ago. So came out on 10th of November. So the Democratic senators, they sent out a letter to White House demanding answers about rising electricity prices caused by AI data centers. They said the government's sweetheart deals with big techs like Facebook or Meta or Google, Oracle, OpenAI. They are helping companies build massive, power hungry data centers while regular people, regular American people, pay higher bills. So that's the issue America is experiencing. So for the cost in America, US power use from AI could grow from 5% to 12% of the country's total electricity in just 3 years. And a single Meta data center could use 5 gigawatts. And I'll just give you guys some context. 5 gigawatts is enough to power 4 million homes. And many families have already seen a 10% higher electricity bills ever since early 2025. So this year alone. And some states may cost even higher. So it costs like 30 to 60% jump very soon. People are really starting to feel like they are competing with trillion-dollar tech companies just to keep their lights on. So that's the struggle of US. But like because of this news, it kind of leads me to the next question. Like, why is US so behind when it comes to the energy supply? What went wrong with the US? So I dig into the research. Basically, it looks like the infrastructure of the US is extremely old. Like nearly half of US power lines are past their safe lifetime. There's a major shortage of power transformers, which is the key equipment that moves power with wait times of up to 2 years. Some companies even have GPUs sitting around, like sitting unused in warehouses, because the grid can't supply enough electricity to run them. So even the US has great AI companies, its aging grid and slow energy growth are holding them back. This is one of the reasons why Donald Trump keeps stressing about energy and keep talking about we need more energy for the country. And yet, I feel like a lot of Americans don't understand how cold the issue is and how this is like a ticking bomb. The US still relies heavily on natural gas and coal, which cause carbon emissions and waterways. Many AI data centers also use huge amounts of water for cooling, making the situation worse in dry regions. The senator's letter called this an unsustainable path, asking the White House to explain how it will protect consumers and ensure tech companies pay their fair share. So, why I bring this up? Because Donald Trump likes to compete with China, and there's a chart that is I find really surprised, and China is actually sitting number one, top power producing countries. So China generated more electricity in 2024 than US, EU, India combined altogether. So that's why Donald Trump keeps saying we need more energy. While the US struggles, China is turning cheap electricity and green energy into a powerful AI advantage. So for China, I'll just give you guys some numbers and you guys will know the context and how cheap electricity is in China. So for a kilowatt, it costs like 50 cents renminbi, which is like 7 cents US dollar. That is less than half of the US average. In remote regions like Guizhou, so let's pull up the chart of China. So Guizhou is right here, or even in inner Mongolia, is even lower. Like the energy cost, the electricity, it costs like 40 cents renminbi for kilowatt after subsidies. Like China's total electricity generation is more than double the US. This means Chinese AI companies pay way less to run their data centers. As I keep talking about AI, we know there's like the latest Chinese AI model called Kiwi K2, and I personally have been using that. I would say it's definitely a really good experience. It's even better than Grok. I hate to admit it's definitely better than Grok. So my question is, why China managed to keep the power so cheap and so stable? Turns out China is really advanced when it comes to renewable energy. So almost half of China's power comes from renewable sources like wind power and solar power. In some areas, green energy only costs around like 18 cents to 25 cents renminbi per kilowatt. Extremely low. And China produces like 80% of world solar panels, which keeps prices low again because like China produces everything in-house within the country. And the second reason is the strategy that they adopted. So it's called East Data, West Computing. That is the strategy, the name of the strategy. So it moves data centers to remote China where energy is cheap and weather is cooler, like it's more chill, more cold, for example, like in Mongolia, and then even on the west side of China. This reduced power and cooling costs by up to 70%. It also avoids the kind of power shortages that the US is now facing. And the third reason is that China grids is so much newer, so much larger, and so much more efficient. They have the ultra high voltage lines, move electricity across the country with a very little loss. So if you try to move electricity from the west to, I don't know, to the south or to the other side of China, so let's say to the east, the electricity that they lost is less than 10%. While if you compare to Europe, compare to US, we are saying the loss is about like 50%. So China is really advanced when it comes to the modern power grid. China adds new power capacity 5 times faster than the US, staying ahead of demand. So there are a lot of reasons why China is like being able to produce Kimi K2 because it just came out last week and it shocked the entire world. Like how cheap China managed to maintain the cost, yet producing one of the best AI models in the entire world. Because AI, because like energy is all it matters for AI. US companies now face higher costs and slower growth if the power grid can't keep up. China's companies can train bigger models, deploy faster, and scale cheaper thanks to lower energy bills. In this day and age, China has all the major cars, so that's why China kind of have the US by the balls. China has rare earth, has like energy supply. US may be still lead in AI chips making, but China is really catching up fast. So to conclude this, the US AI boom is running into energy wars like high costs, old grids, political pressure. Meanwhile, China's cheap and green energy system keeps its AI industry running strong and fast. If AI really is a power race, then a country that controls the cheapest and cleanest energy, not just the fastest chips, will win. So I would say pay very close attention. The US and China battle, it just get closer. Like China is really catching up at a really rapid pace. All right, so that's for the AI news. Just before we wrap this show, there's some sad news that I saw. So this actually happened a few days ago. Well, it's actually it happened a month ago, but like news broke out recently, like a few days ago. So what this is about is it's a really sad story in the crypto world, and it happens in Dubai. So earlier October, so within this year, a Russian guy, so his name is Roman. He was a 38-year-old Russian crypto millionaire, and that's his wife, 37-year-old. They went missing in Dubai after heading to what they thought it was supposed to be a business meeting. A month later, their bodies, so dismembered bodies, were found buried in the Dubai desert near the Hamad mountain area, close to the Oman border, actually. So the police said it was a kidnapping and extortion gone wrong. The killers wanted access to Roman's crypto wallet, but when they found out the wallet was empty, they end up murdered the couple. So this person, again, he's from Russia. He's very well known and very controversial in the crypto world. He founded 2 companies. So the first one is Transcript, which is a crypto exchange software, and the second one is a digital asset transfer app built by Ukrainian programmers. But Roman himself had a criminal past. So in 2020, he was convicted of a large-scale fraud, accused of stealing about $4 million from investors and sentenced 6 years in prison. He got out in 2023, moved to Dubai, and lived a luxurious life. So driving fast cars, private jets, expensive villas, like basically you could see everything on social media. At the time of his death, Russian investigators believe he had stolen over $500 million from investors across Russia, China, and Middle East. And his wife is actually a former TV reporter. She wasn't involved in the business, but of course, like, and get to enjoy the luxurious life. The couple always like show luxurious cars flashing on social media, and looks like because of their high profile, the kidnappers got the attention of the kidnappers. So the kidnappers pretended to be investors interested in one of Roman's crypto projects. So on 2nd of October, the couple agreed to meet them in Hatta, which is a remote mountain area, about like 130 kilometers from Dubai. It's a quiet, isolated near the Oman border. They were last seen when the chauffeur dropped them off near a lake. They switched cars to one owned by the so-called investors. That was the last time anyone saw them alive. Once they arrived at a rented villa, they were ambushed and kidnapped. The kidnappers demand access to Roman's crypto wallets, thinking he held billions in Bitcoin and other coins, and then Roman actually gave the wallet password, but find out the wallet was empty. So the kidnappers they were really frustrated and forced him to message his friend, saying that they need like $200,000 to escape. It's like a fake ransom attempt, but like still they didn't manage to get any money, so they tortured the couple with knives before killing them. The bodies were cut up and buried in the shallow graves of the desert. To cover the tracks, like kidnappers kept the victim's phone on for 2 days, making it look like the couple was still traveling with signals showing up as far as Oman and even South Africa. So after days of silence, her father reported them missing. Russian authorities joined UAE police in the search. About 1 month later, their remains body were found in the desert. So this is a really sad story. Like, again, this is a strong reminder of how public visibility can become a danger in the crypto world. So they were flashing the lifestyle on the social media, made them look like they had unlimited crypto wealth. Maybe they were more wallets, but it also made them an easy target for criminals. So even if wallets were empty, the perception of wealth was enough to get them killed. In crypto, these are called branch attacks, when criminals use physical violence to force someone to give up their wallet keys. So one lesson, I guess a key takeaway from this news, like this is a tragedy, and I'm afraid that this is actually happening not only in Dubai but every part of the world. So I know you guys in crypto, and if you guys are watching this show, that means you guys are early adopters as well, and you guys get an opportunity to make generational wealth. So I'm more than happy, like you guys are making money and of course like take profit and stuff, but like this news constantly remind us that try not to show off too much, especially when it comes to your wealth, and you know that you're in crypto. So try to keep a private life, and never meet unknown investors alone or in remote areas like this. And maybe better to have word of mouth. So try not to meet strangers like so-called investors, because like you're in crypto, you're running that risk. Crypto can bring opportunity, of course, but there's a lot of danger tied to personal exposure like this. So again, this is not exclusive to Dubai. I've heard a lot of scary stories about Dubai, and I have heard that the Dubai desert is actually full of dead bodies, but that is another story. But point being, like you guys are watching the show, you guys are early adopters, so please stay low key, stay safe out there. They're full of dangerous people, full of bad people in the crypto world, trying to take your money or even trying to take your lives. So again, key message, try to stay safe. Digital world can move fast, but it also makes people targets if they're not being careful. So keep your identity private, your funds secure, and your lifestyle humble. This wasn't just a crime, it's actually a warning. Like in crypto, your wallet isn't the only thing at risk, sometimes your life as well. So we're ending on a sad note, but again, I like to bring both sides of the story, like both the flashy lifestyle of crypto or the good stuff of crypto, and also the dark side of crypto. All right, so last call to action before we wrap this up. Make sure to follow us on Twitter, My personal Twitter is gemcrypto_IO. Make sure to follow Roxham TV as well, because we have regular updates coming out every half an hour or something. We don't just cover Bitcoin news, of course. We have like global news about geopolitics, about AI, about macro. So make sure to give us a follow because you don't want to miss out any valuable content. Again, my show is from Monday to Friday, 4 a.m. Eastern Time. Well, 4 a.m. Eastern Time for this week, because next week we are moving to 3 a.m. Eastern Time. I know my time zone is a little bit weird because I'm in Hong Kong. So if you don't manage to catch the show live, I'll really appreciate if you want to catch the replay. So the replay is available on Roxham TV YouTube channel and also on my personal YouTube channel, so Jam Crypto YouTube channel. So again, thank you so much, guys, for watching, and I'll see you guys tomorrow. Stay safe out there.